It's recording. Wonderful. So good morning. My name is Robin. I'm from LKA Chartered Accountants. I am a chartered tax advisor, and we're just in our profession getting lots of information through on making tax digital for income tax purposes. And as part of that, I wanted to run this session because the changes that are going to happen are quite extreme, and I want people to know about them because I think if you can start to be prepared now, then it's going to be a little bit less stressful when that time comes. So I'm going to run through what is are the plans, what is making tax digital for income tax, are there any benefits, what are the drawbacks, what do you need to do now, those kind of things in this session, and then I'll open it up for any questions and answers. But of course, I know that feeling where you watch something like this and you go away and think about it for a little bit afterwards, and then you have some questions. So please, you're very welcome to ask questions as a result of seeing this maybe in the following days anyway. So what is making tax digital for income tax? Or we might hear MTD for ITSA, same thing. And you might hear sometimes making tax digital in general because the revenue brought in something called making tax digital for VAT purposes a few years ago. They're now extending that to income tax. Now, the thought behind it is that the revenue want to bring more people into using software for their business and also for their rental income as landlords. They want essentially more information quicker. And that's why the revenue are doing this. They have a few things that they released. They think that it's going to increase accuracy. We'll go on to that in a minute. But essentially, the thought is that if people digitalize their businesses, then they'll be in a better position to give information to the revenue quicker, more accurately. Now, what are the benefits? I think it's worth starting with some benefits. There are not lots of benefits, in my opinion. I'm fairly opposed to the system as it is at the moment. But there are some, and some people will benefit from bringing their business onto a digital platform. So when I say digital platform, I mean some kind of software. So something that automates really the income and the expenses so that you have some kind of view of your business at every point during the year and that you keep up to date with your bookkeeping. That is no doubt going to benefit some people that will want more up-to-date information. I mean, I do have a fair amount of clients that like to know and have visible, submit more information to the revenue is going to reduce the accuracy. I see lots of people's tax returns in the year, and when I see ones that people have done themselves, generally speaking, they're not completely accurate. So just making people do more returns, I'm not sure will achieve what it says on the tin. Um, so those are the main benefits, if you like, or the only one benefit that some people will be better off by keeping more regular records. What are the drawbacks of being brought into this making tax digital system for income tax? Well, first of all, there's going to be a ton more admin for anyone that's caught under this to do. There's If you're already in a habit of doing your books once a year and you're comfortable with that and you're doing a good job of that, boom, suddenly you're not allowed to do that anymore. You're going to have to do it quarterly. You're going to have to change your habits. And I think that that's a drawback for many business owners, particularly self-employed people. When you get into that rhythm, you're not really doing your self-employment so that you can do your books. You're usually doing it because you actually want to make some profit on your business. But yeah, there's going to be more admin. You may need to consider getting an accountant, so there might be more fees involved in that. And at this time, we as a firm are still working out our fee structure because the information available on exactly how to submit and exactly what that all looks like is not particularly clear, even though we're only about a year away from this being brought in. So we're still trying to work out those fees, and I'm happy to have a chat with anybody that wants to learn a bit more about what we think the costs are going to be for using an accountant to help you with this. And as I said before, I think one of the drawbacks is less accuracy. I think it's going to cause more confusion as people need to submit quarterly returns, and those quarterly returns, will come on to this a little bit, they're going to be cumulative rather than just looking at 3 months at a time. And I think that although that's easier for accountants to deal with, that's going to be much harder for business owners and landlords to sort out for themselves. I think that concept in itself is a scary one. So who will making tax digital apply to? first of all, the first tranche starts in April 2027. So not this April, next April. And anybody with turnover or gross income from self-employment and or rental of £50,000 or more will be brought into this system. Now, that drops it for April, sorry, that's from April 26. From April 27, the threshold will be £30,000 of gross income or gross turnover or gross income from rental. Um, that's a very, very low threshold. So a lot of people are going to be brought into this system. The way that the revenue are going to measure this is going to be looking at your last submitted tax return. So you'll be aware we're coming up to the end of a tax year now, and we'll start the process for people's tax returns in this April. That tax return that we'll be doing between April and January coming up is the one that we're going to look at to see if you fulfill a £50,000 threshold. The one after that will be the one we look at for whether or not you fulfill a 30,000 threshold. Now, the really fun bit of making tax digital here is that it's combined. That 50,000 or that 30,000 is combined. So if you have a self-employment or maybe more than one self-employment and you have a rental income, rental property, then if you had £30,000 of self-employed turnover and £21,000 of gross rental income in the year, boom, you're in. It's not £50,000 for each, it's 50,000 as a total. And same with the 30,000 as that threshold gets brought down. So again, in this area, it's not unusual to see rental income of £30,000 a year, and remembering that that is gross or that's turnover, it's not profit. So for your self-employed side, it literally is just going to look at what you bring in. You're not going to take into account any of your expenses. It's your turnover. And for rental, it's not what hits your bank account, particularly if you have a rental agent. It's what the monthly rent is, the sum of the monthly rent in that period is. So even if you have standard costs coming off of it, we're going to ignore those costs. We're just going for the standard rent. So in my opinion, that's a really, really low threshold, and most people will be brought into that one way or another. We're also looking at foreign rental income for the returns. Now, if you are brought into MTD for ITSA, then what that will mean is a quarterly return, or we call these submissions. They're not technically tax returns, they are submissions for each trade and for rental property as a whole and for foreign rental property as a whole. So the easiest way to explain that is if somebody is self-employed, for example, if you're over the VAT threshold, let's think of it this way. Somebody's self-employed over the VAT threshold doing VAT returns, fine. They also own a rental property. They would end up submitting, of course, their 4 quarterly VAT returns. They're already doing that, but also 8 making tax digital income tax submissions because there's one for the self-employment and one for the rental property. In my opinion, that's quite shocking. Um, the thought that you're going from 4 quarterly VAT returns to 12 quarterly submissions over the year, plus your end submission, your final tax return would also be due. So that's 13 submissions a year. Yeah, it's punchy, right? So that's why I wanted to get this information out there, because I think that is quite a big deal, going from maybe nil submissions if you're under the VAT threshold to at least four plus your tax return. So that's at least 5, potentially 9 if you've got a rental property, and more if you've got separate trades or foreign property, etc. It gets a little bit messy. So the revenue are going to be writing to people that they think that this could apply to. So if they think that it applies to you, now they're basing their information off the last submitted tax return now, so 23-24. So you will get a letter if your turnover and your gross income has breached in 23-24 to say to you they think that you might be brought in. Of course, one, that depends on whether you've completed your tax return correctly and put your correct turnover figures and your gross rent. I see lots of tax returns being submitted with net rent. in the gross rent box. So just be careful there. And just remember that those letters, if you do receive one, if you have had a change in circumstances, so for example, you've sold your rental property or you know that you're going to have a slower year, etc., it's not a final letter. It's not telling you that you have to do it. It should be just warning you that you need to start preparing and thinking about it. What will be the qualifying criteria is what goes on your 24-25 tax return. Um, Once you're in Making Tax Digital as well, you are in for 3 years unless your income drops, and then you have to opt out. And personally, I haven't seen any information about how to opt out or how easy that is to do. But what we do know at the moment, or what we understand at the moment, is that that isn't going to be automatic. So you would be in for at least 3 years worth of submissions once any tax return triggers the thresholds. Um, so you may be listening and thinking, why then are the revenue doing all of this? Surely the only reason to do this would be because they want money quicker. Well, at the moment, there isn't any plan to change the payment dates. So this is a question that's been asked many times to the revenue on webinars that I've been to professionally. Will there be a change to payment dates? So at the moment, your tax is generally due 31st of January following the end of the tax year, perhaps a little earlier if you're making payments on account. The revenue have confirmed that there are no current plans to change the payment deadlines, which is probably good news. I wouldn't I wouldn't bet on that staying that way for long. As far as many in my profession believe, this could be the only reason for them to do it on the long term, that eventually quarterly tax payments are probably going to be due. But for now, no changes. These are literally just submissions of where you're at quarterly in the year. There is, however, a change to the penalty system for these submissions and for your tax return each year. The penalties at the moment for not submitting your tax return, for example, one of those penalties is an automatic £100 penalty if you don't submit on time. You're probably aware of that by the 31st of January. You will see when you're bought into Making Tax Digital that changes to a point system. Now, the point system is billed as being slightly better for the taxpayer. It is if you're on top of it, because there aren't any automatic penalties for one late submission. What happens is that when you make late submissions, you get penalty points, and when you have enough penalty points, a penalty is then charged. The penalties, because it works like that, the penalties are slightly worse. So where it was £100 penalty for late submission of your tax return, these penalties look more like £200. It's a fairly complicated system, so I'm not going to go into it further than that here. But just be aware that that is something that is changing. No late payment penalties because the payment dates aren't changing. In relation to the submission, of course, you will have late payment penalties if you don't pay by the 31st of January as normal, but a change for these submissions. The information is really scant at the moment on how this will work. But as soon as I have more information that I intend to send as much information into the community as I possibly can. But on to really the last bit here that I want to talk about is what should you be doing now if you think that you are caught by Making Tax Digital for ITSA. So of course we have got really a whole year before you're going to be brought into this system. But there are some things that I would really suggest that you do now. And the very first one is to have a look at the software that's out there to help you manage your business. So as a firm, we tend to use Xero. So Xero works off of your bank, and you can reconcile your transactions as you go along. You can do your bookkeeping. It's a fairly user-friendly system once you get used to it. For some people, it will be a little bit overkill. So please, if you feel that way, there are different types of software out there. One thing to note is that at the moment, the revenue have confirmed they won't have their own software to deal with this. So where you can, at the moment, obviously log on and do your own tax return, you won't be able to log on to the revenue and do your own Making Tax Digital for income tax submissions. I think that's a huge own goal on the revenue side. But the point is that they're trying to get people to go on to the digitalized softwares. rolling on from that, having a separate bank account if you don't already for your business or for your rental property would be a majorly good thing to do now. Run everything through one bank account, because then if and when you do go onto some software, your bookkeeping is going to be a hell of a lot easier. Also there's also some software for landlords called Hammock, which I would suggest having a look at. I had a demo by that company recently and it looks pretty good. The costs are in the region of £10 a month, so not crazy. Again, it's another cost for people though. I've just seen your question there about free agent. Free agent isn't something that I use personally, and I have heard mixed things about free agent. So I know that there are some bank accounts at the moment that are offering, I think free agent's one of them, as a free add-on. Some people love it and some people hate it. And I think you're going to find that with every single type of software, that once you get used to it, maybe it's okay. Different softwares have different advantages and disadvantages. Some are a bit more expensive, but do tons of different reports that you can get. Some are less expensive, but won't shove through things that might be useful. You really need to look at it on an individual case and decide whether it's something that you want to work with, which again, I think is part of the confusion of all of this, is that there isn't one thing that really stands out as great. Generally speaking, as I said, we use Zero, but I'm not sure that that's going to be the right thing for absolutely everybody. For some people, it might be a little bit too complicated. On that point, if you're keeping your records on Excel at the moment, which the vast majority of people I deal with do, and I think that that's great. I like a spreadsheet. Um, there is a workaround. You are able to submit using what's called bridging software, which is essentially where you take the figures from your spreadsheet and you type them into a special spreadsheet and submit. Now, I don't think that's available to individual people. I think that the bridging software at the moment is only being released to agents. So that's a case where you might want to weigh up, do I want to go on to some software and pay monthly costs for software and deal with that bookkeeping myself, and potentially have benefits from that so that I don't need an accountant to help me? Or is this just too much and I want to keep on going with how I am and employ an accountant to then do the submissions for me because they have the appropriate software? I can see the benefits of both of that. And really, it will depend on how you feel when you start looking at that software. Um, Otherwise, if you are VAT registered, the other action point would be to look at aligning your VAT quarters with the tax year if you're not already aligned. Because if you don't, what you're going to end up having is quarterly submissions of VAT that you're going to have to be doing quarterly, and then another set of quarterly submissions for making tax digital that don't match the ones that you're doing for VAT. Much easier to change that position now so that the what you're submitting for VAT can basically be replicated for making tax digital purposes. Again, potentially using bridging software or using something like Zero, a professional software. Otherwise, getting a government gateway account is a good idea if you haven't got one. Now, that is just a general piece of advice anyway. Like I said, we're not expecting that you can make these submissions via the government gateway, but having a government gateway generally gives you a bit of access to what's going on in your account, for self-assessment in general. And it makes it slightly easier when I onboard a client that has a government gateway to get some access to information that the revenue have already. So a good idea to set that up if you haven't already. Um, and then really the last point for me to bring up is that the revenue are offering people to sign up early for making tax digital. You might like to consider doing that, just to get a feel of how the submissions work, what they look like. The downside of that is that once you're in for 3 years unless you opt out. The upside is that on the testing process is that by the time it then comes in, you should feel pretty good and you're not lost anything necessarily from signing up, other than being signed in for 3 years. There are no penalties in this first year. There is some discussion about the very first year. So from April next year, 26, there will there should be no penalties for late submission in that first year. Now that I would need to confirm, but there is talk around the testing phase and the first year having no associated penalties. So again, it might just for some people alleviate some of the stress around booms, you're in a system that you're going to be fined for. What do I do? Interestingly, in many of the webinars that I've been on recently, where we're able to discuss professionally what we're going to do, there is some talk about what happens if you're completely wrong on your submissions. Can we just submit nil returns? Can we just do a quarter of my last submitted return, etc.? These are questions that the revenue aren't able to answer at the moment. They say that boo hiss, it's not very much in line with the spirit of making tax digital to do that. But essentially, there's not going to be at the moment fines for inaccurate submissions. So in theory, you could do a nil return. In theory, you could do it based on something more reasonable. But then you're not having the benefits of doing the quarterly return and having a bit more information about your business. So I wouldn't necessarily suggest that that is the best way forward, although technically at the moment possible. So that's really all I think that you need to know right now, that there are some action points that we've been talking about this, or the revenue have been talking about making tax digital for income tax for about 10 years. And this is now the first time that we're hearing it's definitely happening. So I really hope it doesn't happen, but I think that it will be, which is why I'm now getting out there to give this information to people. And to use somebody like me to bounce questions off. If you have questions, please do. Get yourself in a place that you half understand what's going on. And when you receive that letter, you think, okay, yeah, this does apply to me, or this isn't going to apply to me. Have a look at that software and make yourself a plan. So I hope this has been a useful little bit of time this morning. And do you have any questions? I don't. Oh, Chantal.
Hi. So I don't think I'll come into the first year. I'll be
That's
in the
good.
second year.
Yep.
So hopefully they'll have smoothed off all the
Or cancelled it
crumbles.
completely would be great.
Oh yeah. Because
For
I
sure.
do, like, literally I've just been plugging in the numbers while I've been
Mhm.
talking to you and listening to you, because I do it as they come through just to keep up to date.
Well
So
done.
going on to a system, I don't mind, but I am concerned that it's just going to be painfully costly for me because I'm a
Yeah.
small business.
Yep.
So yeah, so I just want to say thank you very much.
Oh, my pleasure.
Do you have a link to this that I could then share? Because I have a business coaching group, which they might find this useful.
Sure. Once we've finished, I will work out how to find the link and we will be able to share it for anyone. Anyone watching this back, and for yourself as well. If you do have questions, feel free to ping me over a message. My email address is Robyn, which is ROBYN at lkassociates.co.uk. Or many of you will have heard about this webinar from the Thames Ditton group. My telephone number if you need me. However, I am a millennial, so I will not be picking up the phone. Please text messages only. WhatsApp is my number is 07816 555 949. So any questions can come either way, and I'll pick them up as soon as I possibly can. Okay. So great. If there's no other questions, we will stop recording and yeah, all the best for making tax digital.